All eyes are on Potash, at least on thestreet.com. So we're bringing you more news about this hot stock. Killer earnings, as we know. The company raises guidance, but the stock is very volatile.
Right. Okay. I think that we're getting to a point now, and no one's going to believe this because they all trade as a unit, but where we're seeing the ones that are integrated, that have more integration to them. Potash worth more than Mosaic. Mosaic's pretty good, which is then worth more than Agrium. And you work down the food trade, Intrepid is then the fourth worth, the fourth, and then the bottom one is Terra. And I look at these and I say to myself over and over again that without the ethanol mandate, and the reason why Potash, by the way, is better, not just that it's integrated, but it has less corn. Without the ethanol mandate, you just can't be in these stocks. Unless you want to be in Potash because that has much less corn. Now, these have become trading vehicles entirely for hedge funds. They're up huge. Having been caught in the natural gas tsunami, I am reluctant to be caught in the fertilizer tsunami. I have been saying as these stocks rally, you should ring the register. You tell people, go listen to the Valero call yesterday. Ethanol is an unmitigated disaster. It is inconceivable to me that a new president would stick by this mandate. It's just inconceivable. It is just,
even Republican president?
Even Republican. Actually, it's Obama that's more linked to it because of Illinois. He's made a lot of deals. He has a lot of ethanol people on his surrounding him. But I think that you have to view now that the mandate is iffy come the election. So your numbers next year may not be as good as this year's. Look, worldwide famine, absolutely. Big change in people's diet that's going to lead to more grain than producing beef and chicken, absolutely. Are the stocks inexpensive? Absolutely. But I think you now have political risk. And when I have political risk, I can't be as excited about this group as I was. I own Deere for ActionAlertsPlus.com. It did not act well after AGCO. I think it should have. I think Deere is inexpensive. A better kind of chicken way to play this. Obviously worried about raw costs because they use a lot of steel. But I now want to go to something I suggested with Apple, okay, and suggested with RIM, which is that what you want to do is you want to buy calls. If Potash is at 200, you want to go out, say, to maybe October, and you buy the October 180 call, and as the stock lifts, you sell common against it, so that if there's a political sea change, maybe you can go out to November because of political sea change, you can sell common against it and trade around it. In other words, it's no longer a straight long. I've been saying the Potash is the one to be in. It is the best, but it's no longer straight long. I don't want to play it with common stock. I want to play it with options. I'm not going to share that on TV. I will say it on Wall Street Confidential because I don't talk about options on TV. But that is the way to play this. Now, this is a controversial strategy. It's called stock replacement. Some people like it. Some people don't. I think when you have a $200 stock and you have the level of risk that you have, you ought to be able to be willing to pay some premium and own a call rather than find this stock down 100 points if the ethanol mandate is scrapped.
All right, you're going to want to have to play this video again. Lots of good information in this one. Thanks so much, Jim Cramer. This is Wall Street Confidential. Stay tuned.